So start talking before they start drinking.
All right, folks, 20 years of investor class power comes with CNBC's 20th anniversary. We are back. Don Luskin, Jerry Bowyer, Peter Schiff, and Dougie Cass. Just as a personal note, I was one of the first. I was an unpaid commentator back in 1989. We were over in Fort Lee, New Jersey. Over the years, I stayed part of the family, stepped out for a while to take some personal problems. This great network brought me back. I am forever grateful. And lo and behold, Jimmy Cramer and I are running a show after 9/11. And lo and behold, we've been running the Kudlow Report or Kudlow and Company since then. I just want to thank every single viewer as well as our wonderful guests for this. Let me put on the full screen some interesting statistics about the performance and behavior of the stock market over the past 20 years. Okay, first of all, shareholder wealth. That has moved up substantially from $3.3 trillion in 1989 to almost $15 trillion in April 2009. That's plus $11.6 trillion for shareholder wealth. When you look at the gains for the Wilshire 5000, it's up 250%. That's 6.5% at an annual rate. Now, the CPI is growing at 2.8% during that period. So in real terms, the gains are 3.6% at an annual rate. I think that's page 1. We'll shift over to page 2 with any luck at all. Now, part of this story is the democratization of the stock market, the growth of the great investor class, which I think is the most significant economic investment and political movement in this country. Back in 1989, according to the Federal Reserve, 32% of families own shares. By 2007, the latest data, 51% own shares. When you look at it for a number of households, 29 million owned shares back in 89, 59 million owned shares as of the end of 2007. And I think we have a picture of at least the Dow Jones, if not the Wilshire 5000, to put up on the screen. We'll see the lousy corrections in all the cycles, but still, it's been a good move over the longer term. There it is. That's that awful-looking correction at the tail end, but you're still way above where you were back in 1989. And if Dougie Cass and others are right, we're going to see that line move back up where it belongs. I want to go to you, Jerry Bowyer, on this point. There's a lot here. There's the rise of the investor class, which I regard as the most potent force in the American economy. Make it the American political economy today. What is your thought?
Well, by the way, happy 20th to you and CNBC.
Thank you.
And thank you for bringing me in and including me in it as well.
You're very welcome.
My thought is that this is what I'm most optimistic about. You're right about democratization. You know, the democratization of politics occurs because there's a free flow of political information. And what we have now with financial media like CNBC is a free flow of financial information. That plus, you know, a lot of things happened with deregulation in the 70s and the 80s, and, you know, the fees for brokers came down, and we're now a majority shareholders. That's why I think, by the way, that the Peter Schiff scenario is not accurate. That's why I think we're not in the 1930s, because in the 1930s, most people didn't have a stake in the system. So they could beat up on Wall Street and vote over and over and over again for anti-growth policies. But we now have a feedback loop. Most citizens, and even more so, most voters have a stake in growth, in economic growth, and the feedback loop tells us that when Obama goes too far to the left, that brings forth the political forces that bring him back to the center.
You see, Peter Schiff, this is my basic fundamental optimism. I believe in progress. I believe in American progress. I believe in American democracy. In the past 10 years, the biggest voters in the elections, all of them, have been people that own shares. And I think they know that free market capitalism is a better system than statist, government-controlled socialism, or whatever we're going to call it, Peter. That is why, despite two awful corrections, and some really bad monetary policy, among other things, in the last decade, I am still an optimist.
Well, if you have a long enough time horizon, you can be an optimist, but there's a lot of pain between now and then. You know, the problem is a lot of these Americans who bought stocks got suckered into the market in the late 1990s. They overpaid for their stocks, And, so they're sitting on big losses. A lot of people overpaid for real estate. So Americans are in debt. I think, if anything, they're looking for inflation to bail them out. And I don't think the fact that the stock market has gone up, and I think we're overstating the gains because I think we're understating inflation, but I don't think it really shows the performance of the U.S. economy, because I think the fundamentals have deteriorated. If you look at our balance of payments, if you look at the debt that we're in, if you look at what's actually happened to American families and to our economy, I don't think the stock market tells the real story.
But Don Luskin, I must say, besides my fundamental belief in American progress and prosperity and our democracy, if something goes wrong, voters vote out the bad guys in Washington. What about American entrepreneurship? What about American initiative? What about American economic freedom? Sometimes it suffers a little, sometimes it advances a little, but on the whole, Don, it has been a fabulous story. Am I to believe, in the depths of a bad downturn and a rough bear market, that all of that entrepreneurship and good common sense of American people working in business every day and now investing is going to go away? Do I really have to believe that?
No. I don't think anybody is saying that you should believe that. America has been a beacon to the world for over 200 years, precisely for all those reasons. But on the other hand, within the time frame that investors have to make decisions, years, decades, you go through periods when that freedom is given greater play and when it's given less play. And when it's given greater play, you have very good, prosperous, high-growth, low-inflation decades. And when it's given less play, you have lower growth, higher inflation, wealth-destroying decades. The 60s and the 70s were in some ways very good, in some ways very bad. The 80s and the 90s were fantastic. Now, we had all our freedoms in all four of those decades, but it was better in the 80s and the 90s than it was in the 60s and 70s. I think all I'm saying is that our next 10 years is probably more like the 70s than the 80s. And the 70s is okay, better than being on a gulag, but I'd rather have the 80s back.
Well, Dougie Cass, when you call this a once-in-a-generation market rebound and opportunity, what is your take? Is this a long-run view on your part?
No, I think that this is a generational bottom. I think, as I said, we're probably facing, in the next 3 to 5 years, a period of lumpy, uneven, inconsistent economic growth. I think one quarter looked like we're coming out of the recession. The next quarter looked like we're going back into a recession. It's going to be awfully hard to navigate, both from the standpoint of corporate managers who don't have pricing power and investment managers. I think it means, basically, to me, as a hedge fund manager, less of a buy-and-hold strategy, more of an opportunistic trading strategy.
Interesting. Let me go around the horn really, really quickly. Peter Schiff, next 20 years, are you a buyer or a seller?
It depends on what I'm buying. I don't want to own cash.
I'm talking about American stocks, quickly.
Some. I'm mainly buying foreign stocks.
All right, so that's a no. Jerry Bowyer, next 20 years, you buying or selling American stocks?
American stocks, American bonds, American real estate, American small business, American private capital, buying America for the next 20 years.
Next 20 years, you buying or selling stocks?
Yeah, buying them, but Larry, I'm just going to hold them in cap weights in the world market portfolio.
All right, Dougie Cass, you get the last. You called this bottom. Buying or selling? Next 20 years, Dougie.
I'm in Jerry Boyer's camp. I usually am. You buy.
All right. Thank you, gentlemen. I appreciate it very much. My thanks to you for coming on our show and helping us, as you always do, on our 20th anniversary. Dougie Cass, Jerry Bowyer, Peter